Welcome to On Markets Questions from the Crowd. This is an event that we run to talk about companies coming through the on-market platform, either from a wholesale basis, which we have today with Stropro, or from an equity crowdfunding basis. What we do is ask questions that majority of investors want to know the answers to. And today we have the three co-founders from Stropro joining us, Anto, Abe and Ben. Welcome, guys.
Thanks, Tim.
Thanks, Tim.
I think one of the things when we first started talking about using on market to raise capital was, I guess, the similar missions that both our companies have come from. You guys from the fact that you like to democratize access to alternative investments. And then from our market side, our mission, and we've been around now for a couple of years, but one of the things that we wanted to do and we set out and still continue want to do is democratize access to both IPOs and early stage capital raisings. So therefore, we've got similar missions. And what I want to do today, and for those watching, we're going to go for probably 20 to 25 minutes. Really is to talk about sort of what you guys do and where you are at the moment, and how someone can invest into your company. Can I hand over to you guys just to talk a little bit about just a brief intro about what is and what is going forward for Stropro?
Yeah, absolutely, Tim. So for everyone on the call, my name's Anto. I'm the CEO and co-founder of Stropro. My role in the business is to really focus on the distribution and the client acquisition. That's the real focus for me. So I'll let the other guys introduce themselves as they briefly as well.
I'm Abraham Robertson, or Abe, an executive director and one of the co-founders with Ben, Anto and Rob, who isn't joining us. My role is really on the technology, the roadmap, legal and compliance, and also some of our more strategic ambitions.
Hi guys, my name's Ben Streeter. I chair our investment committee here at Stropro and manage all of the issuers that we've been onboarding onto the platform so far, and look after the investment operations as well that support the team.
So collectively, just Anto, quickly, just what's Stropro then? To someone who you're just meeting on the street, who are you guys?
Yeah, absolutely. So Stropro, Tim, we're an investment platform that provides access to a range of alternatives globally, whether that be venture capital, private equity, private debt, cryptocurrency, ESG, impact, the whole alternative spectrum outside of your traditional property and equities. And something that our business is heavily anchored around is structured investments, which we'll cover off in the conversation, I'm sure.
So just based on, and we heard a little bit about your background, just based on your diverse backgrounds, and Anto, your sort of City CBA, Ben City, Abe's ex-ASX, what led you guys to get together? What did you see based on working for those particular, let's call them large global blue chip investment banks, as well as Abe at the exchange? What led you to put together the platform you've got, and what's that point of difference to sitting there at Citibank and issuing structured products to what you've created today?
Yeah, maybe I'll start, Tim. I think on a broader theme, what we were seeing is the shift globally to alternatives and the growing wallet share that alternatives were making up, especially in Europe and North America. And what we know is Australians are fast followers, especially when they're digitally enabled. And so what we saw is an opportunity to digitize and provide the technology, that infrastructure, that investment platform into the global world of alternatives. I think what the boys saw, and they can talk about the private bank experience at Citi, was they were already servicing high net worth clients, and they saw what a digital platform like Stropro could offer their clients.
Yeah, absolutely. I think just to add to that, to that point about dislocation, where the market is in its moment, there's a dislocation of equity, property, interest rates are going up, volatility is rife because inflationary pressures exist in the market. I think for most people, the traditional approach to investing in property and equities, there's more on the horizon in terms of alternatives that clients can access, whether it be to get capital preservation, income, growth, or non-market correlated exposure. And that world of alternatives provides that. So from a Citi perspective, we were looking to obviously build that for global clients. Unfortunately, there are very slow manual processes that those clients had to go through, particularly a non-digital experience. And that's what we've streamlined here, a digital experience for clients to access alternatives.
And then the business model you put in place, can you sort of run through for potential investors how that works, how you guys make money?
Yeah, I'll jump in, and then Ben, you might want to talk a bit more. But so what we provide is access to a global panel of issuers, product issuers, and Ben will talk about what those issuers are. But at the moment, our structure is that clients do not pay a fee to us. We're paid a distribution fee by these product issuers. And you might be wondering, why would a product issuer pay us to distribute? But distributing to the Australian populace is quite difficult. And to date, that's been done, sort of man to man with like sales reps out there. And Anto was one of them for Citi. So what we're providing these global investment banks and global issuers is a way to distribute their products seamlessly through a digital experience into the Australian populace. And so we get paid by the distributors at this point in time. We will put or soon we're going to launch a platform fee, and the justification for the platform fee is we've really developed some superior portfolio reporting tools in there, and we also provide custody and sort of like safekeeping for these assets on behalf of clients. And because alternatives are a bit different, they're not exchange traded, obviously. Sometimes that custody and safekeeping requires a bit more digitization. So we'll add a platform fee, which will be similar to what you might get charged by Netwealth, Hub24 Premium.
Okay. Possible to give sort of a case study from one of your bank of issuers as to how they came to you guys and what you put out and potentially the product they put out and how that's worked? I mean, I can easily understand everyone's after distribution. You're providing greater distribution in the as you said, Abe, in a seamless way. What's the case study there that you could point to?
Yeah, I might jump in there, Tim. So I think what the issuers have seen is that their distribution networks are pretty limited. Their main distribution networks across Asia, Europe, the US are predominantly through private banks. Now, the private banking scene in Australia is quite limited. There's only really one or two sort of decent ones that are doing quite well. And one of those sort of private wealth outfits was where Anto and I came from at Citi. And when we were at Citi, we pretty much built the distribution market for structured products, we were the predominant distributor of structured investments in Australia. So when the issuers sort of noticed that Anto and I had left to sort of create our own, what they see as a digital distribution platform, they're obviously quite excited by that opportunity. So after starting with sort of one or two issuers, getting that product market fit, getting our processes right, market infrastructure right, building the product, the end to end, we were then ready to tap on a number of additional issuers. And now we're at the spot now where issuers are approaching us asking to join the panel, and these are global bank names. So that's been exciting, I think, because up until October 2021 last year, we were only operating with really one issuer as we were building a lot of those operational and legal requirements to get set up.
How many issuers now, Ben? How many on the panel?
So we've got 6 investment banks on the panel that we're operating with. There's another 4 or 5 in under due diligence, and then we've got our alternative fund issuers on top of that, of which we've already worked with. We've done 4 of those, and we've got about 15 or so in the pipeline there across, all those typical assets like private debt, infrastructure, some property, some crypto, even some hedge funds that we're looking at as well.
And
VC.
if I was a client of yours as an investor, how many opportunities a year would I sort of have the opportunity to partake in, roughly speaking?
Yeah, I think great question. Very different last year compared with this year. We've been really running a lot faster. I think I looked at a stat yesterday that showed that half of our total products were launched this year. So we've cracked the 50 product milestone just last week, and half of those 25 have been launched this year. So at any given time, you could see in terms of where we're at now and the trajectory that we're on, you could expect to see anywhere between 5 and 10 strategies on any given month.
And from an investor perspective, the minimum parcel size into some of those, what sort of range are you looking at?
Yeah, I think for most it's sort of been between as low as 10K sometimes, but some sort of have minimums of 50, and it sort of ranges in between, really depending on the product and the issuer.
And Ben, if I can jump in there, I think what we thought was when we digitized the platform, Tim, that we'd be bringing these ticket sizes down. So it was, upwards. If you're at a private bank, it's $500,000 to $1 million minimum entry. My experience at Expansive in carbon markets and ASX was as soon as you digitize, you lower minimums, but increase volumes. But what we've actually found is our average ticket size is 110,000. The average portfolio that we manage on behalf of clients, we call it funds under administration, is 330,000. We've got 750 clients who have registered on the platform. A third or 25% have activated so far. We've got 100 advisors on the platform. And I think the reason why I want to say that is what they're looking for is these bespoke, customized solutions, which we can really do. We can go from ideating, structuring, listing, raising and closing a product in 24 hours, which is a phenomenal, like in financial services, is pretty phenomenal. And that's working with a global issuer out of London as well. So I think that's what I think the family offices in particular like. It's a competitive panel for pricing, and then a really, really slick, streamlined digital experience for the investment.
Okay, so just a little bit about, is it 27 months since you launched?
It is.
Okay, achieved a lot in that short period of time. Just a little bit around your revenue over the last 12 months. And then I know that slide sitting there in your deck for the investors that want to see that. What 2023, 2024 look like in terms of your aspirations on revenue from where you're coming from last year?
Yeah, absolutely. So for the end of this financial year, Tim, we're targeting 600K in revenue, which is a good close to 40% uplift in revenue from last year when we had already a limited issuer panel, limited products, as we were just saying before. And for the foreseeable financial year, we're going to look to touch 2.5 million, and the year after that, touching closer to 6. So,
FY23, 2.5 million.
Yeah.
Up from 600 from FY22, what you're looking at now.
Yeah, and
then increasing up to maybe 6 mil in FY24.
That's right. And the reason primarily for that is the acceleration in growth that we've had as a business as a result of unlocking our panel of issuers. We've built significant infrastructure to do that. As a result of that, the client growth has been enormous over this last 6 months. We've had over 110 investment transactions take place on the platform from high net worth families and individuals. So we're seeing that emulating over the course of the next 12 months quite comfortably.
So Anto, just I was going to ask this question a little bit later. The trade winds or the tailwinds that are behind you, can you just elaborate a little bit on what's happening there as a sector as a whole in the alt space? What you're seeing, the amount of, I guess, capital that's out there to be deployed. Is there an impact from COVID on that, or how's that? Just a little bit, a minute on just what you're seeing out there and what the tailwinds are that's going to drag you into that sort of increase on your revenue over the next couple of years.
Yeah, absolutely. So the way we like to look at some of the tailwinds is look at from a macro perspective and then the business. So let me just cover the macro perspective for the people on the call. Firstly, there's a significant amount of wealth in Australia, and traditionally that's been allocated to property and equities. So those investors traditionally haven't had access to alternatives. The second key thing is there is a growing appetite for alternatives globally. If you look at ultra high net worth allocation to alternatives, it's around 52-54%. And in that high net worth market, 30% globally. In Australia, that somewhere sits around 12%, based on a recent report from Premium as well that came out. So we see us giving access to Australian investors to that alternatives market as bridging that gap. There's going to be a strong appetite from Australian investors to alternatives. How do we bridge that gap? That's access. So we expect that to be a $7 trillion market in APAC by 2025. And so there's a very strong tailwind for alternatives.
Is that low take up? Is that low take up of alternatives by Australian high net worths because there hasn't been the ability to access it hasn't been there, and the product selection hasn't been there?
Yeah, absolutely. I mean, traditionally, if you're a high net worth investor, you go to a private bank. The private bank is very limited in its offering on what they can even access.
Sure.
So we're much more nimble, agile to access global alternative opportunities. As Abe was saying, in a matter of 24 hours, we can get products customized, curated on the platform and executed for clients. And that's taking into consideration a lot of their views on the market as well.
No competitors to you guys in the Aussie market?
Well, in the structured investment space, where the sole sort of multi-issuer investment platform for structured investments, there are a lot of tailwinds globally for platforms like Stropro. In fact, answering your question, there's a series of global platforms out there, particularly in the US, that have opened up within the structured investment space over the last 5 years. They've all raised well over $100 million or more in the last 12 months. So we know alternatives are, there's a very strong appetite for it. The way those platforms have traditionally serviced their clients is through the advisor. We have a unique advantage in the fact that we service both advisors and end clients, whether that be high net worth or family offices as well. Sure. So we're in that part of the world in APAC as the emerging player for structured investments and alternatives generally. But there is a strong tailwind of platforms globally. You would have heard of Case, Halo, Simon, Yield Street as a few examples that the audience can hear.
That's a good answer. Abe, anything to add to that?
I think maybe just going back to your question about COVID, I think what we've seen over the last few years is if you've been fortunate and been investing in equity markets, you've seen a massive bull run. And I think if you've been in property, you've also experienced some significant appreciation in capital growth, and that's been excellent. I think there's obviously been a big dislocation recently in equity markets and in the property market, mainly caused by changes with inflation and interest rates. And I think the general view is that alternatives are a wonderful place to go invest while the volatility is high in the market. We're unique in that we're able to take advantage of boom markets by providing leverage into those themes, and we did that during COVID. Now what we're really focused on is capital preservation and income enhancement, and I think we're doing a very good job of that, taking advantage of that volatility in the market, but providing investors with something different to the property and equity where they're seeing some changes go through.
That really has to do, Tim, with a real intergenerational shift in the way people invest. So, there's a mindset change that's happening as well with how wealth is managed, and ESG impact, social good and sustainability is becoming core. And, being able to respond to investor preferences through alternatives has been a key advantage for us.
You're looking to raise sort of upwards of $2 million. How are you going to use that? We like working with companies like this because we call it growth capital, and I think a lot of investors like growth capital. They don't necessarily want to come in when it's risky and it's back of the napkin stuff where you guys might have been 27 months ago. It's obviously a harder check to write. You've obviously proven that you've got the smarts to be able to get to where you got to now. You've laid out the path. You see that there's the tailwinds behind you. You want to raise the 2 mil. Where's that being deployed to get you to that sort of FY23 and FY24 revenue numbers?
Yeah, Tim, I think the approach we took was to be capital light during the development phase, but really focus on the infrastructure and the technology that we've built. We've got that. We've got our own dev team in-house. They're already paid for. They're done. It's really about focusing on sales and marketing. So getting our brand out there, telling our story, client acquisition, client onboarding, and we're one of those unique companies that benefit from the compounding effect of having clients. So, like, we see clients invest, they increase their wealth, and they reinvest the wealth they've already invested with us. So, SaaS businesses are great because they're locked in over time. We're a great business because it compounds over time. So, like other investment platforms. So, our focus is really just on client acquisition and telling our story, and that's where most of this money will be going towards. We do have some ambitions for the technology and roadmap, but as I said again, like, we've already got a really great tech team that's on top of that. So we'll be mainly investing in people to assist Anto on the sales side. Makes sense.
And the terms of the offer, can you sort of run through what are the terms, safe note, etc.?
Yeah. So we're raising 2 million is our target. We have about 700,000 now committed. It's with a 20% discount to the next price round, subject to a valuation cap of 12 mil. So if the next round is at 15 mil or above, investors will be converted at 12 million. If it's under 15 million, they'll get the benefit of that 20% discount.
Sure. Okay. And then just in conclusion, what we like to do is just sort of, in 3 points, maybe one from each of you. That might be the easiest way to do this. Why should an investor want to be a shareholder, let alone a client, but why should they want to be an investor into Stropro? So maybe one from each of you guys, your best one. Whoever wants to go first, take it away.
I think from my perspective is, like, we've already built this business. Like, we have our business. All we're doing is growing. And so from that perspective, as an angel investor myself, that's what you kind of look for, is you want to be in this round because the next round for us might really scale. We're already getting approaches from some of those bigger players overseas. And I think there's some obvious sort of pathways for us to exit a business like this. And so for me, it's like you're investing in a business that's already built. We've got the technology, we've got the platform, we have our own financial services license. And so you're just investing in that growth, as you mentioned, Tim, that growth capital. So I think we're de-risked is the way I would say it.
Yeah, that's a really good point. The de-risking and also, the pathway to a liquidity event. It's not hard to imagine you guys, in a trade sale in a couple of years' time at a valuation significantly higher than where you are now.
Yeah. And I think, just to add to that, look, as a business, we've had, cash flow positive months along the way, which is a great sign that, the business can really, turn its head. And I think over the next 12 months with the infrastructure we've built, we're basically buying up revenue with the capital that we, deploy in this particular round. But what I'm really excited about is we're part of a significant global trend to alternatives. And I'd like to think that we are the number one player for alternatives in this region. So for me, that's a pretty exciting factor to have that stamp as a clear APAC winner in this part of the world.
Okay.
For me, Tim, yeah, I think it's quite macro for me. Like, I think, we do review venture capital funds quite a bit. So obviously we go through the usual, what are the founders like, and what's the product and problems that they're solving and all the rest of it. But I think it's quite macro for me. I think the boom in both the alternatives market, it's set to double in Asia Pacific over the next 5 years. We're seeing, structured products alone go up 500% in the US, and we're perfectly positioned to ride both of those waves. So for me, I guess in more of the investment team, I'm very excited about the outlook and the boom in alts. So yeah, that's probably the main one from my perspective.
Okay, awesome, guys. Listen, I don't think there's any questions there at the moment. But thank you for joining us, taking us through the opportunity. We really like what you guys are doing. As I said, there's a lot of alignment there from on market to Stropro in terms of providing access to Australian investors. You guys in the alternatives market, us in the sort of early stage and IPO market. But I think between the two of us, we're doing a great job for Aussie investors in giving them access to stuff that traditionally has been really hard to come by.
Absolutely.
Thanks, gents.
Thanks, Tim, and thanks for having us.
Pleasure.
Yep, thanks,
Not
Tim.
a problem.
Thanks, Cassie.
Cheers.